Hey everyone, and welcome! Are you trying to get your head around your financial future? Well, you're in the right place. In this explainer, we are going to break down LIC's new endowment plan. We'll cut through all the jargon and just focus on what you actually need to know, what it is, who can get it, and how it works for you. So let's dive right in.
So let me start by asking you a question. Are you looking for a single plan that does two jobs at once? One that helps you build up your savings for future goals, but at the same time creates a solid financial safety net for your family if something unexpected happens? If you're nodding along, then this is definitely for you.
Okay, first things first, let's really get into what this new endowment plan is all about. What's the fundamental idea here?
Honestly, the best way to picture it is like this. It's like having a piggy bank for your long-term goals, helping you save money in a really disciplined way. But it also comes with this protective shield. And that shield is a life insurance cover that makes sure your family is financially secure if you're no longer around.
Now, you'll hear a couple of official-sounding terms. Let's just quickly decode them. First, it's a participating plan. Just think of it like this. When LIC does well and makes a profit, you get to participate. You get a share of that profit through bonuses, which gives your savings a nice boost. Second, it's non-linked. All that means is your money isn't tied to the ups and downs of the stock market, which offers much more stable, predictable growth. So, to quickly sum up the best parts, you get that amazing combination of saving money and being protected. You get to choose how often you pay your premiums, so it's super flexible. You can even decide to get your payout in installments later on. And this is a big one, there's a loan facility built in, kind of like a financial safety valve if you ever need cash in a pinch.
All right, so that covers the what. But now let's talk about who this plan is really for. What are the rules on who can sign up?
So, the age range is actually pretty broad. You can get a plan started for a child who is just 8 years old.
And the cutoff for starting a new plan is at 50 years old.
Now, what about how long the plan runs? Well, the shortest commitment you can make is for 12 years.
And if you have a really long-term goal in mind, you can stretch it out for as long as 35 years.
When it comes to the life cover, or what's called the sum assured, the minimum you can get starts at 2 lakh rupees.
But here's the really interesting part. There's actually no maximum limit. You can get as much coverage as you need, as long as it fits within LIC's underwriting rules. Okay, now for the part everyone really cares about, the benefits. Let's talk money. What do you or your family actually get out of this plan?
So there are basically two main ways a payout happens. The first scenario is the maturity benefit. That's what you get if you're there for the whole journey, right to the end of the policy. The second is the death benefit, which is what your family would receive if you were to pass away while the policy is active.
So let's say you see the policy all the way through to the end. Congrats, you get the maturity benefit. This is a combination of your original sum assured plus all those yearly bonuses that have been added over time, and you might even get a final one-time bonus as a little loyalty reward. Now, in the unfortunate case of a death during the policy term, your nominee gets the death benefit. This is made up of the sum assured on death, which is whichever is higher, your basic sum assured or 7 times your annual premium, plus all the bonuses that have been built up so far. This really makes sure your family has a significant financial cushion to fall back on. So beyond those core benefits, the plan has some really cool optional features. And this is where you can start to customize the coverage to fit your exact needs. These are what we call riders. Think of them like optional upgrades for your plan. For a little bit extra, you can add things like extra cover for accidental death and disability, critical illness, or even a premium waiver, which is amazing. It means the policy keeps going even if the person paying the premiums passes away. Here's another really powerful feature, the settlement option. Instead of your family getting a single big lump sum payment, you can actually set it up so they receive it as a regular, steady income over 5, 10, or even 15 years. This can be a massive help for managing everyday bills and making sure that the money lasts. And finally, let's just quickly run through a few of the practical details, the nuts and bolts that are really good to know. So, what if you suddenly need cash for an emergency? Well, after you've paid premiums for just 1 full year, you can actually take out a loan against the value of your policy. It's a fantastic way to get your hands on some funds without having to completely cash in your long-term plan. Life happens, right? And sometimes you might miss a payment due date. Don't worry, the plan comes with a grace period. You get 30 extra days for most payment plans and 15 days for monthly payments to pay your premium without any penalty and keep everything active.
And what if you miss the grace period and your policy actually lapses? Well, you get a very generous 5-year window to bring it back to life. All you have to do is pay the premiums you missed, plus some interest, and just like that, your savings and protection plan is right back on track.
So, to wrap it all up, this plan really is a smart blend of disciplined saving and must-have protection. The real question I want to leave you with is this: how could one plan that combines a steady savings habit with a built-in safety net truly change the course of your family's financial story? It's a powerful thought. Thanks so much for joining me for this explainer.